and welcome to Market Domination. I'm Julie Hyman, that's Josh Lipton. We are giving you the ultimate investing playbook to help tune out the noise and make the right moves for your money.
And here's your headline blitz, getting you up to speed 1 hour before the closing bell rings on Wall Street.
This goes to the heart of Apple, to the iPhone. Even if they're successful in mitigating some of these impacts, it will by definition weaken Apple's hold, especially in the US iPhone market.
Bitcoin seems to be the most free market asset that we have, and so things like supply and demand, just the pure, if there's that more demand and you're going to cut the supply in half, the price should go up much higher.
Yes, I believe this is a defining point to rebuild this industry for the future, and I'm super happy that I and Intel have been able to play a part in that transformation.
We've got 1 hour to go until the market close, and we're going to show you where we are and how we got here for the major averages. So let's start with the Dow here, which is down by 190 points, a pause from the recent rally that we have seen. Nonetheless, the rally on the week is still intact with 2.26% is the increase for the Dow. And let's take a look at the other major averages on that front as well. The S&P just about flat on the day. However, on the week, it's still seeing a gain of 2.4%. And then finally getting to the Nasdaq here, which is up nearly 3% on the week, even as it's only up about 0.25% today. Very strong week for the major averages, which is something that bears watching. You know, we've been talking all week as well about what's going on with both the equal weight and small caps. And there, too, we have seen strong performance, although not an outperformance when it comes to how they're looking versus the major averages. Also want to take a look at the sectors here for the S&P 500. We've got utilities actually doing the best today, along with tech and communication services. So a bit of a mixed bag, not very thematic. Real estate, financials, and consumer discretionary on the downside. What has driven the gains during this big rally that we have seen this week? It's been communication services, industrials, and consumer discretionary. So it's felt sort of more cyclically led in terms of what's gaining this week. That is also borne out by the fact that real estate, the worst performing group on the week, down 0.8%. Now, Josh, you're watching a particular stock here.
That's right. Let's talk for a minute here, Julie, about former President Donald Trump, because he could be said here to make a windfall, at least on paper. Investors approving a blank check deal that would bring his media startup public perhaps as soon as next week. Trump Media and Technology can now go public in a deal with Digital World Acquisition. That merger would hand Trump billions worth of shares. You can see Digital World shares, they are down in today's trade, though remember that SPAC has surged huge, about 130% this year. Before breaking out the champagne, though, Trump shares would be subject to a lockup for about roughly 6 months, so that could stop him from monetizing that stock for a period of time. But it does give Trump billions worth of stock, as our former president does have a 60% stake in the company.
Yes, when the deal is all said and done. Trump posting on Truth Social today saying he has $500 million in cash to meet his various legal obligations, including a bond that I believe is due on Monday here. So he's not going to, even if the deal closes on Monday, he's not going to your point, he's not going to have access to these funds for quite some time. There is one potential out here, and that's if the company agrees to expedite his share sales. It very well could, because these are allies of the former president. However, it could cause some chaos in terms of how the stock is trading.
Sure.
If he's dumping a bunch of shares, and if we know publicly that he's gotten the go-ahead to do so. So it's a bit of a more complex situation here for Trump than just being able to sell the shares and get the money.
It's a lot of drama, a lot of puts and takes. We have a great guest coming up later, by the way, to talk about this. Yeah, looking forward to it.
We're going to talk about it in the 4 p.m. hour.
Let's move on here. Time for calls of the day. We're going to start here with Wedbush lifting its target price on Google's parent company Alphabet to $175. That's up from $160. The firm also adding the tech giant to its best ideas list. So we've heard this, it's interesting, we've heard this kind of skepticism about Google from some, that they just aren't moving fast enough and smart enough when it comes to AI. And you've seen the stock kind of lag, at least its mega cap peers this year. But here comes the team at Wedbush, that's Scott Devitt and Dan Ives specifically. And they say Alphabet's a buy In fact, they move it to their best ideas list. Bottom line, I think here, they sum it up in their note, we believe the perceived structural risks to Google search are overstated and continue to view Alphabet as a net beneficiary of generative AI.
You know, what was interesting about this note is, yes, the sort of market view does seem to be that there are risks. But we talked to another smart guy this week, Mark Mahaney, over at Evercore ISI, and he made very similar comments. Let's play for you what he said just a couple days ago.
I think this is actually going to lead to a material increase in the overall number of searches that people do with Google. That's a deeply contrarian point of view now. So that's why I think there's a little bit of an unnecessary overhang on Google. And that's one of the reasons why I made Google, for the first time in maybe 2 or 3 years, one of our top picks, actually supplanted Meta.
Yeah, so interesting there. And it's sort of a similar case, although the folks over at Wedbush, Devin and Ives, did a sort of side-by-side search using AI, Gen AI assisted search, and just regular search to see how many ads came up in each situation. So they did this big case study. And basically they said it was pretty similar. So they don't see a loss in ad revenue as a result of layering on this Gen AI ability.
Yeah, although as tech develops, you do wonder. I mean, to the extent that, and even the only thing I would question these bulls on is kind of, let's say search gets disrupted and Google, listen, very smart group of engineers, they move with that. Even so, Julie, you just kind of wonder what the economics of search looks like going ahead. Is it still going to be that sort of high margin business investors love?
Yes, exactly. And so will that apples to apples comparison even make sense?
Right.
6 months from now, we'll see. Let's also talk about Papa John's, which is being hit with a downgrade. BTIG slashing its rating on the stock to neutral from buy. And the move comes after the departure of CEO Rob Lynch, who was just hired away from Papa John's to go to Shake Shack. Now, this is not the only downgrade that has come for Papa John's in the wake of this news, but the stock continues to fall after Lynch basically got poached to go over to Shake Shack.
Yeah, I mean, a couple different ratings changes. I look at the team at Stifel, by the way, they weighed in too, Julie. Read it as sell. They didn't like it before. They don't like it now either. Expect the CEO departure, they told clients, to be disruptive, could impact franchises' willingness to accelerate development. Says they are in a weak competitive position in a tough category. Yeah,
and they talk about that is BTIG, that is Peter Saleh over there, talking about the turnover that's already been seen at Papa John's. Now, the CFO, Ravi Thanawala, is the interim CEO, and Saleh says, we're confident in his leadership. But he's only been at Papa John's for less than a year and was at Nike before. So he doesn't have restaurant operating experience specifically. And there's been other executive turnover there. So that's one of the reasons also that BTIG is getting less positive on the name.
Yeah, it has not been easy to be long Papa John's, deep in the red this year and over the past 12 months.
All right, let's broaden it back out right now, because despite the mixed action on Wall Street today, stocks are still on track for their best week thus far of the year. The Nasdaq heading for another record. The S&P 500 fighting for gains today. We'll see if it makes it there. And of course, there have been a series of catalysts, from NVIDIA's GTC event on Monday to the Fed decision on Wednesday, all of that helping to drive the optimism. Joining us now, Amanda Agati, PNC Asset Management Group CIO. Amanda, it's great to see you.
It's great to see you too. Thanks so much for having me.
So when we talk about the catalysts that we have seen this week in NVIDIA, the Fed not, sort of seen as dovish, what now, right? We see the markets today kind of going sideways, and if we're looking for sort of the next catalyst out there, what's it going to be? Or do we even need one? Do we have sort of a drift up that continues?
Well, it does seem like we have this bit of a drift up or melt up, if you will, in terms of this theme that's really taking hold this year. But I think from our perspective, this market is effectively priced to perfection here. And so we are really looking for some kind of strong fundamental catalyst to actually make the market move higher instead of just kind of like the trend line move. From my perspective, I think that fundamental catalyst needs to be a broadening in earnings growth participation. We have not seen that yet. We thought Q4 earnings season would be it, but hopeful that maybe we'll see it for Q1.
And so what do you earnings season, Amanda, is just a few weeks away here. What are you expecting then? What's sort of your outlook for corporate profits?
Well, the challenge is that when you look at earnings growth for the S&P 500 with the Magnificent Seven, it tells a very different story than when you back those seven stocks out. So what's happening with the bottom 493? We finished Q4 earnings season with a big distinction between winners and losers. Strong headline number of 4% earnings growth year over year. But when you back the seven out, it's more like -6. And so the expectation for Q1 is that even with those seven stocks out, we might finally turn the corner to very modest positive growth. But it's a very narrow window, a very narrow margin for error.
And so where are you looking right now, Amanda? Or are you getting more defensive here? Kind of how are you positioning?
Well, we've been running a bit of a defensive playbook really since last year. And so the story this year is not all that much different, particularly given how much further valuations have moved this year. But defense to us doesn't mean raise a ton of cash and move to the sidelines. It really just means stay fairly well diversified, stay focused on the long-term targets, pick your spots very carefully, and be very valuation conscious in this environment. So I do think that there are pockets of opportunity. I actually think what's more interesting is perhaps what's happening on the fixed income side of the equation. I think there's a bit more opportunity to allocate capital there in the very short run, again, given this sort of valuation disconnect.
And Amanda, for fixed income investors who are listening right now, where do you see opportunity?
Well, you got to go investment grade for sure. For the better part of the 10 years leading up to the pandemic, we were very focused in below investment grade and credit oriented markets. We were starved for yield, right? We're picking up a lot of basis points of yield. You thankfully don't have to do that anymore. And so we're very focused on investment grade, high grade, core fixed income. We're also putting cash that is sitting on the sidelines to work. You know, we're on the eve of a Fed policy pivot here. Those money market yields look really attractive today, but they are fleeting. And so we're encouraging our investors to make moves into longer duration fixed income.
Amanda, just quickly here, when you're looking to the next crop of inflation data, what are you expecting?
Well, I think we're expecting a little bit of inflationary fire, not problematic necessarily, but we don't think that the Fed is going to be content with the data that comes in, that we're making a lot of progress toward the long-term target. We continue to believe that inflation data is going to be choppy here in the short run, largely a function of what's happening on the energy side of the equation and also what's happening on the services side of the equation. And so that last mile, that last 100 bips to get to the long-term target for the Fed is going to continue to be a bit challenging. So we don't think we're going to get a lot of comfort around the next couple of data points. But that really means the time is on the side of the Fed. They can be patient before taking that first step to cut.
All right, Amanda, thanks a lot. Have a great weekend.
Thank you. You too.
Thanks. We're just getting started here on Market Domination. Coming up, the newest edition of our series, Good Buy or Goodbye. We'll get investor insight on 2 stocks to help you make the best choices for your portfolio. Plus, the first ever Bitcoin Investor Day is underway. We're going to hear from Skybridge founder Anthony Scaramucci later this hour. Stick around for more Market Domination.
Oil prices sinking again in today's trade. That's after climbing earlier this week. With more, we're now joined by Bob Yager, Executive Director of Energy Futures at Mizuho Americas. Bob, it's good to have you here.
Thank you for having me.
So oil's interesting to think about here, just the push and pull, Bob. You know, you think about geopolitical conflict, but on the other hand, you know, stronger dollar to consider. You know, looking at oil just under 81 here. Where do you think we're headed, Bob, just in the near to kind of intermediate term?
Well, it's on top of the geopolitics involved. It's also we're 2 months away from driving season. So right now, the refineries in this country are going to start to ramp up. They're going to take a lot of crude oil through the refinery. This is a seasonal thing that happens every year. We had a big pop in demand in the last 2 weeks in the month of March, which is very rare. And we had gasoline outpace crude oil to the upside. That's one of the things that sparked crude oil to the new high, the new multi-month high that we put in this week. Earlier in the week. And this last storage report, though, that demand number, it sagged a little bit, but it's a very good sign that demand is very strong. It's at 9 million barrels a day. The all-time record's 10 million barrels a day, and that was in the summertime in 2021.
I want to, we'll go back to oil, but I do want to ask a little bit more about gasoline because so many drivers are paying so much attention to it. There are political implications of where gasoline goes. So do you think we will continue to see that trend higher more than it seasonally does in summer?
Well, I think that the refiner has learned his lesson. We came out of COVID. The perception was that the U.S. driver wanted to drive all over the place and burn through gasoline like there was no tomorrow. And the price at the pump got as high as $5 a gallon. It killed the golden goose. The driver stopped driving. And the refiner was basically left holding the barrel. Prices fell accordingly very quickly, and I think they've learned their lesson from that. They will probably try and feather the price in there somewhere around $3.50 at the most, maybe $4. We're basically $3.25 right now-ish, and they know what will happen if we get to $5. They'll lose demand rather quickly.
So that's good news then for people who are driving around.
It is. And I think there's some political pressure on not to get there also as a function of inflation also.
Mm-hmm. And Bob, I want to get your take too. You look at China, still kind of shaky over there. How does that play into your outlook for oil?
It's not good at all. That's a big number right there. Their demand, they were the reason why we were able to get to where we are now post-COVID. Post-negative prices, when demand slid off the face of the earth at the beginning of COVID, and we went to negative prices, two things happened. Saudis cut production, and China eventually emerged and was the big demand engine that rallied the market to the moon. That's not going to happen anymore. It doesn't look like that's in the cards for any time soon. So they're not going to, it's not going to be demand destruction, but they're going to stay at this level to maybe a couple barrels higher, but they're not going to take the market and run higher with it. And that's a dilemma for the folks at OPEC. They need that demand. They're starting to increasingly look to India as maybe the future demand engine. So that's a different situation.
How realistic is that, Bob,
There's 1.3 million people there that a lot of them don't drive at all at this point. And they're going to be buying old cars from the United States that we ship to India, and the rest of the world will be shipping. And those are gas guzzlers. The largest refinery in the world is the 1 million barrel per day Reliance refinery. That's a monster, and it's there for a reason.
We were talking before we came on air that I was in Houston at CERAWeek this week, which is the big oil and gas conference annually, and there has been sort of a renewed pushback amongst the oil industry about the energy transition, right? You had the Saudi Aramco CEO calling the idea that we are moving away from oil and gas right now a fantasy and that we need to invest more. Where are you on the question of like peak demand, where we are on that continuum?
Well, there's two sides to this story, basically. First of all, the Eco Clean Energy Index, for starters, it's trading at multi-year lows. Right. So as a combined index with 75 names in it, it's getting killed. It's not working. A lot of the names in that index are just not cost effective. The technologies cannot compete with fossil fuel at the end of the day. And the people involved have stepped back a little bit from that space as a result. On the other hand, we're going to set the new demand number probably in 2035-ish. So you still have 10 years. We have to work through this Indian situation for starters also. Other emerging third world countries, they're not going to be driving new Teslas anytime soon. And that's going to put the peak oil story on the back burner for a while. Now, there's some clean energy companies that are doing really well on the other hand, like Constellation Energy. It's a utility is nuclear and has a lot of clean energy mixture also. That's the third best performing name in the S&P 500 this year. So there's a certain rotation away from the Magnificent Seven into the old school name, and they seem to be the darling of that switch. So there's other names like that. GE's doing great. They're a provider of clean energy infrastructure to a lot of people that participate. So there are two sides to that story, but fossil fuel is not going to go. It's not going to evaporate from the scene anytime soon.
Right. Yeah.
Bob, thanks so much for joining us today. Appreciate it.
Thank you. Thank you for having me.
And coming up, Skybridge founder Anthony Scaramucci talks about what's to come for crypto from the first ever Bitcoin Investor Day.
We're back here live at Bitcoin Investor Day. I'm here with Anthony Scaramucci, the man who needs no introduction, of course, of Skybridge Capital fame. Anthony, thanks so much for taking some time.
Good to be here, Brett. Thank you.
Absolutely. Okay, we've got a big day, a lot of energy here. What is, and this is what a lot of people are trying to figure out here at this conference and even beyond, what is the next inflection point for cryptocurrency and for Bitcoin that you're trying?
Well, first thing I want to say is congratulations, Anthony Pompliano, for the conference, because this is layered. You have individual investors here, big-name institutional investors, and I think what the Pomp is trying to do is make this accessible to everybody. And so I really do believe that's the next step. We had a retail explosion in Bitcoin demand in the beginning. It's now flipped over where institutions are comfortable because they have an ETF that they can purchase, been green-lighted by the SEC. And you have the halving coming up. And so at some point, late April, call it around April 20th or the 22nd, you'll cut the supply of new Bitcoin entering into the market by half. You'll start spitting out 450 Bitcoin a day. And if you have this pace of demand, that should push the price up a lot. But remember, I would have never guessed that Grayscale would have been cut in half 2 months into the Bitcoin ETF approval. So
what do you think's behind that right now? Because that's something we're
I think
tracking.
it's a combination of things. I think bankruptcy trustees at places like Celsius, at places like FTX, Genesis, we could name them all, are flooding the market with their GBTC, and they're just trying to get a price above 60, so they're flooding the market.
Is that what you've heard, that FTX is
I think
liquidating
FTX is
some of
already
its
out.
position?
I think
Already
they
out.
sold a few weeks ago, but these other guys are still selling. And then I think you have the garden variety person that's been in GBTC who, accepted the 2% fee because there was no other game in town. And now they're like, wait a minute, I can go to a 21 basis point fee. So if it's an IRA, 100% they're moving that day. And then it's just a question of how much taxes you want to pay for taxable accounts. So, you could have another 15 days of selling before you see this thing calm down.
There was an interesting stat that Mike Novogratz of Galaxy brought up during his fireside chat, and it was about the great wealth transfer that we're set to see in the next few years here. $84 trillion in wealth owned by U.S. baby boomers, and they largely invest through registered investment advisors and whatnot. If we see a great wealth transfer, what does that hold for Bitcoin in the near future from your perspective?
So I'm going to give you an example from Web 1. I was 30 when the Netscape browser came out in 1995. And I was old. Okay, we were late adapters to things like email, web browsing, purchasing things on the net, and accessing news. But somebody that was 10 or 15 was gung-ho. That's Bitcoin. Excuse me. So somebody today, 45's, a little bit of Bitcoin, but somebody 25, a lot of Bitcoin. So in the next 10 years, I see it like a big Python where the Bitcoin's going to get absorbed into the Python. There'll be a big bump up in Bitcoin demand. And that's coming inside of the next decade. This is why people like Michael Novogratz or Cathie Wood, they see a $1 million Bitcoin. And by the way, just remind everybody, a $1 million Bitcoin is a $21 trillion marketplace. Gold is 14, 15. They're suggesting that Bitcoin should trade to 150% of gold's overall market cap. Let's say they're wrong. Let's say it trades to its market cap or half of what they're saying. That's still inside of the ballpark of what I would consider digital gold. Now, if somebody like Safedin Amos is right, you could end up in a situation of hyper fiat currency inflation where people start relying more on Bitcoin because of the hard nature of the asset.
Do you think then, with that in mind and the interest among younger potential wealth holders in the future, that Bitcoin finds itself in the throes of this election conversation in 2024?
I think it already is. I think, we're learning that Elizabeth Warren's team is asking other senators to put out statements on behalf of her because she's afraid to be at the tip of the spear of the anti-crypto movement anymore. I think you're learning that there's probably 45-ish million wallets in the United States, and many of those people are eligible voters, and many of those people will vote. And so I think eventually you're going to end up in a situation where both sides have to be pro-coiners, pro-crypto, pro-digital property. Otherwise, it could cost them an election.
Does that also mean then that we see more of a gravitation towards central bank digital currencies if there is a bipartisan effort that moves forward?
So it's a good question. So we looked at that. You know, that happened on a Wednesday when I was in the White House. The reason I know that, I was only there for one Wednesday. And we had a white paper come out in 2017 talking about central bank digital currency. Mnuchin tabled it. I think Janet Yellen will table it. Question is, will the next administration, and I think it'll likely be a Biden administration, will they table it? And it really depends on what our competitors are doing. The Chinese have a digital currency. If there's a euro digital currency, I think it'll be impossible for the United States not to have a version of one, or to really promote something like Circle, which is not a central bank digital currency, but is a stable coin on the net.
Why then wouldn't we see a consortium of central banks create their own cross-functional digital currency?
It's a good question, and so I know there's libertarians that are against it. If you're asking my opinion, I'm not for it, but that doesn't mean it won't happen. I think there's an inevitability to this. It's sort of like what Elon Musk says about AI. He doesn't like elements of it, but there's an inevitability, and so I think it'll eventually happen. I just don't know when.
And then just lastly, while we have you mentioned Elon Musk. I mean, you track a range of different asset types. And what we're seeing in the equity market right now, there's a fallout from some of the companies that were once in the Magnificent Seven. There's, of course, now a checking of even some of the AI plays that are out there. How much more juice do you think this AI trade has left in it?
It's a really good question, and obviously nobody knows the answer to that. But here's what I would say. If the Fed starts cutting rates, they're indicating that they'll do 3 rate cuts this year. I think that gives a little bit of buoyancy to the market. Those stocks probably are overbought at this moment, so they could have a 10 or 15% correction. But what I tell clients, so what? Hold these things for a 3 to 5 year play. Hold them for 7 years. If you hold Bitcoin, something like Bitcoin, for 4 years, there's not one person in a rolling 4-year period of time that hasn't made money if you just stayed in the asset. And so I bought my first Bitcoin in 2020, October. It went up a lot in 21. I looked like a genius. It went down a lot in 22. I looked like a dummy. And now I'm somewhere in the middle because it went up a lot again. But if you just hold it, you'll be okay. That's my message to the AI people. That's my message to the Magnificent Seven. They're probably overbought. I don't like the concentration of those 7 stocks versus the other 493 in the S&P 500. That's happened before, and that usually spells a near-term correction for the overall markets. But you got the Fed cutting rates, you got a very strong economy, so I wouldn't want to be left out. It's just too hard to predict.
Anthony, thanks so much for taking the time.
Great to be on. Thank you.
Absolutely. We'll toss things back to you guys.
It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Let's bring in David Miller, Catalyst Fund's Chief Investment Officer and Senior Portfolio Manager. And let's get right to your buy here. And we'll do a little tease. Your Goodbye is one of those Magnificent Seven stocks that we just heard Anthony talk about. But let's get to your stock that you do like first of all, and that is Hims & Hers Health. Now this is an interesting one. It's had a good year to date so far. It came public back in 2019 as part of a de-SPAC, right? And so let's get to your bull case here. Basically that it's a grower is your first point.
Absolutely. 47% revenue growth, massive revenue growth. Even when the stock was declining, interestingly enough, it was growing incredibly quickly and massive margins.
Yeah, and also the company is now profitable, which is something it hadn't been on a regular basis here. So is this something that now it's going to be more consistent in terms of its profitability?
Absolutely. So it's one of the few SPACs that I really like. And now that they're profitable, when you're profitable and you have massive margins and you continue growing, and that percentage of their costs that are marketing expenditures continue to decrease, you'll just see that net income continue to grow very rapidly is my anticipation.
Now, this company, for those people who aren't familiar with Hims & Hers, they provide men's and women's health products online, right? So they sell them online. We used to see pre-pandemic, they had a lot of ads in the subway here in New York City. So that was one of the ways I first got exposed to them. And what is the what problem are they solving for customers that you think is unique?
I'd say they're solving 3 huge problems for customers. First is when you wanted medication in the past, you had to go into a doctor's office. Now, if that were for an embarrassing problem like a ED or balding or things of that nature, or things where you just don't want to go to the doctor's office, now you can do it on the computer. 2 is you used to actually have to go to the pharmacy to then get that medication. They ship it straight to your home in a couple days. 3 is that these medications used to be either very expensive if you paid out of pocket, or you'd have to buy it through insurance and a copay. It's actually cheaper to buy these directly than the cost of the insurance copay. So it's saving you money, and it's saving a lot of time, and it's making life dramatically easier, which is why you're seeing so much customer adoption.
Right. And as always, when we talk about these, though, we got to talk about some of the risks to the potential upside. So if we look in this case, maybe there could be some changing regulation around telehealth. And there's also competition from Roe, which is another startup. So let's take the first of these first. What could happen on the regulation front?
So there's already been some changes in regulation around the pandemic and when they made it a lot easier to do telehealth. Now that hasn't affected Hims & Hers yet because they're generally medications that are easy to get, very little in the way of side effects. They're not like significant antidepressants or painkillers that are addictive. They're things that pose little risk, but that could always change. Second to the point with Roe's a direct competitor. They're both great services. Potentially one will do better than the other, but this is also a very big space and they're both solving a huge problem in removing the need to go to the doctor's office or the pharmacy or pay more money. So when you can solve all 3 of those problems and make life easier for people, there's a good chance they can both do well.
Interesting. All right, now let's get to your goodbye. And this one, I'm going to venture to say this is a little bit of a risky call, perhaps, because it's a very popular stock. We're talking about NVIDIA, but there are people now who are talking about maybe it's gone too far too fast. So first of all, you say that, it's already growing a lot and it's getting ever bigger. So is it going to be tougher for it to grow going forward at the same pace?
So there's 2 different issues. Will it continue to grow? Will the net income grow rapidly? Yeah, I think the company is going to grow very rapidly both on the top line and the bottom line. The real risk here to people who decide to own NVIDIA is they're paying 25 times revenue for a company that has a $2 trillion valuation roughly. There's never been a company in history that's justified that type of valuation at that type of size. You have to really think that NVIDIA is going to be the largest company on earth to justify that. Now, will they be? It's certainly possible. But are there less risky ways that you can get a better risk-adjusted return? I think so.
And this is an interesting point that you make as well. Back up real quick, that semiconductors tend to be cyclical. It tends to be a commodity business. Now, NVIDIA's argument is that the complexity of the chips that they're producing has decommodified it to some extent. Do you not buy that argument?
I do buy their argument. Okay. It's clearly true. There's enormous demand for their chips right now. Right now, they have a game-changer chip. Nobody in history before would pay $250,000 for a chip. There's no question that their company is doing incredibly well, and they're going to continue to do well in the near future. The question is, will that continue indefinitely? Historically, you've always had boom and bust cycles in semiconductors, chip makers. It's getting priced now like that's over. There's never going to be another company that's going to compete directly with NVIDIA, and that remains to be seen.
Yeah, and then finally, this kind of sums up what you alluded to a couple of times, that it's valued as though it's going to be the biggest company, as though it's never going to see any competition, et cetera.
Exactly. That's the big question. If they could maintain this lead that they have indefinitely, sure, they're definitely going to be worth it. But is there a reason to think 5-10 years from now, other people can't catch up and they're going to have incredibly high, unusual margins forever? My thought is less likely.
Gotcha. And then the risk to the downside case here is that, in particular, that what they just announced, that Blackwell chip, that it is going to be tough to compete against.
Yeah, and it absolutely will be. And to clarify, I'm not saying NVIDIA is a short. Gotcha. I'm saying I'd avoid it. It's certainly possible that AI will be the biggest thing ever. and it very likely will be huge. The question is it worth $2 trillion today?
Right, and maybe there's other ways to play it, as you mentioned. Just real quickly here, are you long hims and hers?
Yes, I am.
But you don't have a position in
Don't
it?
have a position one way or the other in it.
Okay, gotcha. So let's sum up what you're telling investors here. Basically, you say you would buy hims and hers given its growth, it costs the tipping point into profitability, and it creates amazing value for customers. On the other side, you say avoid NVIDIA given that maybe it's priced for perfection here and will not live up to the very, very lofty expectations being priced in. Really appreciate it, David. Thank you. And thank you for watching Goodbye or Goodbye. We're going to be bringing you new episodes 3 times a week at 3:30 p.m. Eastern.
Time now for some of the day's trending tickers as we're nearing the end of the trading day. Let's take a look at the cannabis stocks. They are surging in today's trade. And the news here was that a group commissioned, actually a couple different storylines, but let's start off with a group that commissioned by the federal government of Canada, Julie, did recommend reviewing taxes charged to pot producers, it sounds like. So the group basically said, listen, the excise tax is a problem, and it was put in place when the average price of cannabis was a lot higher than it is today. And so they said in this statement, we see an opportunity to update the tax policy to reflect the current reality, the group said. So what happens next? It sounds like per reports there's going to be a recommendation made to the federal government there. Doesn't sound like we have an exact timeline yet, but that was one piece of news that clearly investors like today.
Yeah, and the other piece of news is that Germany is now decriminalizing cannabis as of April 1st. Possession and home cultivation will be decriminalized for adults. They'll be able to own, to possess limited amounts here. The context for all of this, there's a couple of things to mention. Cannabis stocks have been decimated, so there's that, right? They've been very out of favor. But they've been rallying not just today, but all week. A couple of things have gone on. Last Friday, Vice President Kamala Harris hosted an event on reform of marijuana regulation. And so that kind of gave a bit of a catalyst to the group. And all this week, we've seen this rally.
Yeah, you're also seeing investors kind of pick out which names it looks like kind of have exposure to the German market, by the way. So reading through reports, it looks like Canopy Growth is one, Tilray is another.
Right, exactly. All right, let's also take a look at Tesla, which is also trending today. Those shares are taking a hit. The EV maker reportedly reducing production of electric vehicles at its China plant. And what you and I both keyed in on, Josh, is it's reducing production by reducing the workload they're not changing the shifts, the length of the shifts at the plant, but they're reducing the operations to 5 days from 6.5 days. So there's still clearly demand. They're just paring it back a little bit.
Yeah, I think it just still played into these kind of broader concerns we of course, have talked a lot about with Tesla, which is just the backdrop of slowing EV demand, still growing, it's just not growing like it used to. And then also just in China, we've talked a lot too, Julie, about the competition that Elon Musk hovers there from the home team, BYD.
Yeah, and remember in January and February, the company's deliveries from those Chinese factories dropped 6% from the like period the year earlier, and only about half of those vehicles went to the local market. We know that Tesla has been cutting prices there, just as it had been in other areas around the globe. But there's also a lot of homegrown competition within China.
You also had, by the way, another piece of news that Senator Elizabeth Warren wants the SEC to investigate Tesla. It sounds like kind of overboard independence, saying new evidence has emerged in recent months that deepen my concerns that Tesla's board lacks independence from Mr. Musk, who uses his control over the board for his personal benefits. Said that in a letter to Chairman Gary Gensler at the SEC. Not really anything particularly new here or shocking. We've heard this arguments before from the senator. By the way, Musk went right back at her on X. No love lost between these two.
No, and the shares are now down more than 30% this year alone. Coming up, which companies are worth a buy for those looking to play the athleisure space in their portfolio? We're going to hear from analysts in our investor playbook. That's next.
In a post-COVID world, athleisure is having a moment. The trend soaring into a full-blown industry with roughly 200 new brands hitting the market since COVID. So which names are best for your portfolio? We're looking at how to navigate the big picture with the Yahoo Finance Playbook. We're joined now by Zach Warren, CFRA analyst, and Sharon Zakfia, head of the Consumer Sector Equity Research Group at William Blair. Welcome both of you to the show. And Zach, maybe I'll start with you, and we can start just kind of big picture, Zach. You know this sector very well. You know the names. I'm just interested kind of broadly, Zach, what are you seeing? How healthy and resilient does this sector look? What are kind of the underlying demand trends look like to you?
Yeah, thanks for having me. So, in the U.S., you're starting to see a little bit of weakening, and that's kind of been happening over the last 12 months, as the U.S. consumer kind of deals with a lot of different, headwinds. So in the U.S., you're seeing a little bit of a weakening, but nothing scary. It's not, the apocalypse, the world's not ending, but you're seeing a softening there. And then internationally, it's kind of company by company. Some companies are pretty much able to grow at will, while others have kind of struggled. So, you've seen that with Lululemon and Nike after hours yesterday. Lululemon was able to grow 78% in China, which is pretty incredible. And then Nike only had 6% growth. So, Europe was a little weak for Nike, but, Canada or Lululemon doesn't really talk much about other markets outside of China other than just their international market. But we think it's kind of a winner-loser market.
Sharon, let's get your take on this too, kind of where we are in the consumer spending spectrum and how willing, in particular, I think U.S. consumers are to spend on athleisure right now.
Yeah, I think in the broader context, we continue to see consumers shift to spending on more experiences versus goods. Athleisure is not immune to that. But if you look at athleisure in the context of the broader apparel category, the trends look very good relative to the broader space. So we're seeing resiliency within athleisure that I think is different than what we see in broader apparel.
And Zach, let's dig into some specific names here. Talk Lululemon. They reported, obviously, Zach, investors were disappointed. But you go from buy to strong buy on the rating, Zach. How come? Walk us through that.
Yeah, so in the last 5 years or so, you've only had a couple of opportunities to buy Lululemon at under 30 times forward earnings, and right now they're trading roughly at 28 times. And so, we see that opportunity for a great company. Lulu's operating margins continue to trend higher. Obviously, they've got growth in China and internationally. They're seeing a little bit of softening in the U.S. And, that kind of, I think, is where shares slid last night was once, CEO came on and said that they were seeing weakness here. But, we think this is a great buying opportunity. And, we love the company. We think the company is one of those. They guide really conservative usually, and then they raise throughout the year. So, we think this is a starting point. We think they'll continue to raise guidance. Our estimates for next year are much higher than what they have.
Well, and Sharon, I know you're positive on Lululemon as well. Do you agree with Zach that this is sort of the typical Lulu playbook where they're just being overly conservative, or should investors be concerned about the slowing that Calvin McDonald referred to?
Yeah, and I think just to level set, Lululemon's trends in the U.S. were very healthy through January. So we're talking about 6 weeks of a slightly slower trend. February is usually not the tail that wags the dog in broader retail sales. And there are some inventory dynamics that they alluded to, having better depth in smaller sizes, having more color. These are things they can fix. So it's not all macro. And I do agree. This is a company that has a very long history of exceeding its initial guide. We think, inventory adjustments and the marketing activations that they're doing, of which there will be 3 major ones this quarter, are probably not fully contemplated as positive wildcards in this guidance. So we think there is room for this guidance to prove beatable.
All right, 2 believers there in Lululemon. Zach, I want to turn to another name that did disappoint. That'd be Nike. It's down about 7% in today's trade. You went to a hold on that name, Zach. Why a hold? What kept you from going to a buy?
Yeah, so, we had Nike as a sell. We've kind of been back and forth, sell and hold on Nike over the past 2 or 3 years. And we just think, we're just concerned on where they're going to get their next level of growth. Obviously, we love the brand. We know that it's a worldwide global brand. one of the largest in apparel and footwear. And, you know, we love the balance sheet. That's never been the issue. They buy back a lot of shares. We're having a trouble, you know, figuring out where they're going to get their next level of growth. They saturated the U.S. market. They saw a pop there during inflation. So obviously, as they raised prices, they saw a boost in revenues in the U.S. But we just, you know, the U.S. is saturated. There's some areas of growth in Europe that they can kind of head towards, and, you know, soccer and some other sports. But, you know, outside of that, and then China's really been disappointing too. So, you know, we're just going to wait and see here. We think there's going to be a better opportunity to buy Nike, and we'd rather wait and see, you know, be patient and hold here, just because we're not sure where they're going to get growth from.
And Sharon, you don't cover Nike, but you do cover Under Armour. And we just recently got bombshell news about the departure of, you know, CEO Stephanie Linnartz, who hasn't been there very long, and Kevin Blank coming back. I believe you're still positive on the name. You still think investors should buy it. Why?
I mean, I think Stephanie architected a big change in leadership over the last year. And 2/3 of the leadership is new. Kevin was involved, to our understanding, in those acquisitions of talent. And we think, you know, basically the goal here is to steer the ship towards growth in the U.S. They have not had that sustainably for quite a while in terms of revenue, but also harvest more margin. And so we've thought of this year as a margin harvesting year, as the new creative team and new leadership has the opportunity to really lay the foundation for better revenue growth in 2025. I think that all stays intact, but obviously we'll have to hear what Kevin has to say on the next call. But, you know, he has been there. He's been chair and brand chief. So presumably he has been involved in much of this strategy as well.
Sharon, Zach, thank you both so much for joining us today. Have a great weekend.
Thank you.
Thanks.
That's it for Market Domination. Stay tuned for the closing bell and Market Domination Overtime coming up after the break.
There's the closing bell on Wall Street, and now it is market domination overtime. Josh and I joined by Jared Blickery to get you up to speed on the action from today's session. So let's start with where the major averages ended, and they ended lower, and in fact, even at the lows of the session. If you look at the Dow Jones, down more than 300 points on the day, taking a little bit of a leg down there, but even at the end, down 0.7%. The S&P 500 off about 0.1%, although it had a more sort of volatile session in a relatively narrow range. And the Nasdaq Composite finishing higher, but again, off the highs of the session. The Nasdaq, the only of the three major averages to close at a record today because it had any gain. Now, even that said, with the sort of volatility that we saw today, all three major averages did have a very positive up week, and in particular, the Nasdaq rising about 3% on the week. Something else I just quickly wanted to check on for the week before we take it over to Jared is what we saw yields do on the week. After we heard from Jay Powell on Wednesday in a press conference that was broadly viewed as dovish, with the Fed reiterating 3 interest rate cuts this year, we continue to say yields moved down. Now, it wasn't a big move over the past week, but enough to kind of fuel that gain that we saw for stocks. Now, Jared's got a closer look at today's sector action. Hey, Jared.
Hey, Julie, and thank you for that. And that wonderful explanation of the bond market. Very important, yields dropping. That is a tailwind, if nothing else, for a lot of these big stocks, especially tech stocks that we look at. Here, communication services is the big winner of the day, followed by utilities and tech. But let me take a look at the 5-day action. By the way, financials down over 1%. That was the biggest loser. And no financials are not reaching a record high today, but we do have some others. Really interesting to see XLC, communication services, up over 3%. That is a leader for the week, followed by industrials and then consumer discretionary. So an interesting mix of some mega caps, some industrials. And when I say XLC, that's really Alphabet and Meta. Those are the two biggest contributors here. And you can see Alphabet up almost 7%, Meta up almost 5 or over 5%. And then NVIDIA, you want a record high. NVIDIA closing its investor week with a record closing high. I think that'll be good for it. Yes, it will right there. So quite the eventful week, not only for AI, but for the rest of the markets as well. Really interesting to see. The biggest loser among my leaders this week was crypto, GBTC. That's my Bitcoin proxy. That's down 7%. Had some negativity in China, but for the most part, it was up and away. Home builders and cannabis really leading this week.
Jared, I'll take it from there. Another name we want to take a look at here is Reddit, which is in the red here. It is pairing gains. Of course, soared yesterday when it made its trading debut on the NYSE. Reddit is such an interesting asset, Julie. Big user base, healthy top line growth, but still posting losses, despite the fact that it has been around a long time. I think fans would probably counter that losses are shrinking, which is fair. Part of Reddit's pitch, though, now, of course, is that it's also an AI play, allowing third parties to license access data on the platform to train AI models. More broadly, few different IPOs this week. So there was Reddit, and of course, there's also Astera Labs, which we talked about on the show, also soared, Julie.
Yeah, on the point about the proposition that Reddit is going to make money from sort of selling the rights to train AI on its platform. Our Hamza Shaban wrote a really interesting piece in the Morning Brief newsletter today, where he said, that is something that the company is selling, but at the same time, it's also putting itself forth as showing the value of human-generated content. So those things are sort of at odds with one another, because it's showing the value of human-generated content, but teaching AI to better mimic human-generated content, which you would think would be counter to its own interests. So I just thought that was an interesting point that he brought up.
And also, licensing data has piqued the interest of regulators, too.
Right.
Which is another thing to keep in mind.
Yes, and that's a risk for across a number of different platforms. A couple of things to note about Reddit specifically. ARK has nibbled at the shares, and ARK Investment Management, and a couple of its different funds. And also, options are going to begin trading already on Monday, because the period now between IPO and when options can trade has shortened from 4 sessions to 2 sessions. So that could cause a little bit more activity, both to the up and downside in those shares. And here with the top takeaways of the trading week, let's get to Yahoo Finance senior reporter Alexandra Canal. Hey, Ali.
Hey.
So as we talked about, it was a Fed week, and so that has to do with how you're reviewing the week as well.
Yes, there was a lot of anticipation heading into this meeting, particularly when it came to those dot plots, right? Were we going to see the Fed maintain its projection of 3 cuts this year? And I thought it was interesting because, Josh, you and I were talking to a friend of the show, Michael Antonelli, earlier this week, and he basically came with the notion it doesn't matter if the Fed cuts once, twice, or maybe even not at all, because the economy is so strong. And I think what we got from the summary of economic projections really highlights that fact. Fed officials are penciling in that higher economic growth. They upwardly revised their revisions for GDP to 2.1%. That's up from the 1.4% the Fed officials expected back in their December projections. They also said that unemployment was going to fall to 4%. That's down from 4.1% in their projection. So it seemed like the Fed is increasingly confident that we're going to achieve this soft landing narrative, and it might not matter so much when it comes to when they cut, if they cut, because the economy has just remained so incredibly resilient. You can even look at something like existing home sales, for example, that shot up 9.5% in February over the prior month. Homes, they're a very interest rate sensitive area of the market, but they're doing well. The market's still tight, inventory's up, possible sign that maybe we've reached the low point there. So I think the story here is that the economy is performing well and stocks are at record highs. We're still at pretty high interest rates despite all of that. So as long as the economy remains resilient, that might lead us into that soft landing camp.
Yeah, it was interesting because we were just talking to a strategist today, and the fundamentals, she was saying, I think she agreed, economy's strong and that should drive corporate profits. Right. The question is how much you're willing to pay for that. And I think she was kind of skeptical about the multiple.
Yes, definitely. Well, and speaking about skeptical of multiples, we were talking about the Mag 7. The subject of the negative side of goodbye or goodbye today was interestingly NVIDIA. So clearly people are looking at some of these multiples, but in particular in the Mag 7, Apple had a tough one this week.
No good, very bad week is what I'm calling Apple. That DOJ antitrust lawsuit, wiped off billions of dollars off of the market cap. The stock closed down more than 4% on Thursday. We have bounced back off of those lows with the stock up about a 0.5 percentage point today. But I think this underscores the potential cracks in the Mag 7 that we've been discussing and talking about, this broadening of the rally. Apple's not the only one in that camp. Tesla as well. We have heard from analysts that tech is a pretty crowded space, and there could be room for a potential pullback this year. That's probably a point that you were discussing in your goodbye or goodbye play. And I think the fact that Microsoft has now surpassed Apple in market cap in that Mag 7, the fact that Apple is going to continue to face these challenges, and as we head deeper into this antitrust competitive lawsuit, I do think that we could see further pullback in some of these tech names and these tech stocks. That being said, though, I do think tech continues to show some resiliency. It was the only major index to close in the green today. And if you take a look at the sector action, communication services, tech, and utilities are.
NVIDIA was at a record again today. There's one group that did not do well today, and just briefly, athleisure, which we talked a little bit about. Under some pressure.
Yeah, and this all has to come from guidance and outlook. And what's interesting about Lululemon, it's a very high-end consumer, but the CEO on the earnings call said that they're seeing this shift in consumer behavior, which potentially signals some fatigue when it comes to demand there. And then on the Nike side, they have increased competition. So I just wonder if this could be the end of this athleisure boom that we've been seeing since COVID. Yeah. Now we're a few years removed, but these results certainly are disappointing.
Yep. Thanks, Sally.
Yeah, thanks, guys.
Moving on, former President Donald Trump's Truth Social could be a publicly traded company as early as next week after shareholders finally approved the merger with Digital World Acquisition. Stock tumbling more than 13% on the day. Joining us now is Axios business editor Dan Primack. Dan, it is great to have you on the show. Maybe start, Dan, walk our viewers through what this could all mean for former President Donald Trump, because it does sound like, Dan, this could mean a potential incredible windfall for him.
Yeah, it's pretty remarkable. You're talking about billions of dollars for a company that is making single-digit millions of dollars in revenue. Yeah, so Trump, if this thing and when this thing goes public, on paper, when the merger passed today, Trump would have been up almost $3.5 billion. Now that's paper value, that is stock value. It dropped, as you saw on the chart. We're down about 14% today, so that brings them to about $2.9 billion, but that's again $2.9 billion. Now it's a little bit tricky. He can't just, that's not cash in the bank, that is paper stock value. He is locked up for 6 months. He can't sell shares for 6 months. He could get an exception from the board, and the board includes his son and former members of his administration. But it's a little bit of a dance there, because if he was to do a major stock sale, that in theory would tank the value of the rest of his shares. So he would have to be careful about it. And there are questions, would there be enough market liquidity for a massive block sale?
Yeah, and there's also the question of whether he can sort of borrow against his shares, right? But even that, he would need some sort of waiver, right?
He would, and it would be a remarkable thing for someone to loan against what is really a meme stock right now. Again, there's not much of an underlying business there at the moment, and even if you take the asset itself aside, post-SPAC companies, this is going public via SPAC or a blank check company, they've done really poorly as a group over the last couple of years. So for anyone who'd be lending against this, it would have to be at a hell of a rate, because it would be a really surprising thing to lend against as collateral.
And Dan, I'm just seeing Bloomberg noting here, Trump media lost $49 million in the 9 months through September, generated only about $3 million in revenue. Do we have any kind of line of sight into what exactly the business strategy is here going forward?
We really don't. And we also don't have Q4 numbers from last year, let alone obviously not Q1 numbers of this year. Right now, it is purely an ad business. And I will tell you, I was on the app last night and I was kind of scrolling through. The only ads I was getting fed, I think there might have been one for Rumble, but other than that, the only ads I was being fed were either for the Trump campaign, and it's unclear if Truth Social is even being paid for those or if it's in kind. And then there were ads for today's shareholder vote coming from DWAC, the SPAC. There was nothing else on there.
Yeah, I mean, it's interesting, too. The momentum with signups has actually slowed down, and pretty sharply, from some of the information that I was seeing cited around today. According to SimilarWeb, the average monthly number of global visitors has fallen, or fell, I guess, last year. And obviously, I mean, is this thing a real business? I guess is kind of the question here, Dan.
At the moment, it's not really. Again, for the first 9 months of last year, and remember, it launched in early 22, so it's not brand new last year. For the first 9 months, as Josh just said, it made less than $3.5 million top line. That is tiny money. There are people, I think, with Substacks who made more than that in the first 9 months of last year. It is not much money, particularly given that last year is also the year that Donald Trump, launched his campaign and is always in the news. He never went over to X or Twitter when he was given the opportunity by Elon Musk. So right now, there's not much of a business. But what there is a very big fan base, not just of Trump, but also of this stock kind of as a meme stock. I watched the shareholder vote today on a live Rumble live stream that somebody was kind of programming. The guy was dressed up in a pirate suit. He called himself Captain Dwack, which is the name of the stock. And there was a couple thousand people watching the thing.
Captain Dwack.
Captain Dwack.
Thanks a lot, Dan. That gave me a good laugh going into the weekend. You have a good one. Appreciate your time.
You too.
Thanks. On the other side of the break, we're going to hear from a Reddit moderator on what the company's IPO means for users. We've got more market domination overtime coming up.
Reddit shares sliding in second day of trading, giving up some of the gains seen in its public debut. Company allowing customers to participate, he tried to say, in the IPO alongside institutional investors. Looking ahead, Reddit execs are eyeing the next phase for the company with more AI and advertising. For a pulse on user sentiment after the platform's market debut, we have Reddit user Noor Al, head moderator of Wall Street Bets. Noor, it is good to see you. Maybe start by explaining to the audience, Noor, what does a moderator exactly do? What are kind of the roles and responsibilities there, and how long have you been doing it, Noor?
Sure. Yeah, I've been a moderator for Wall Street Bets for about 9 years now. And really, the responsibilities are about as varied as it gets, whether you're building bots to help maintain the sub or just browsing the subreddit as a regular user and upvoting things you like or don't like and removing comments and posts that break the rules. It's quite the mixed bag, but all in a day's work of driving community and culture.
And so, Noor, obviously you are a fan of Reddit because you've been on it for a while. Do you think that it is a good investment as an IPO, and did you get any shares in the IPO?
I wish I got shares in the IPO. I am Canadian, so wasn't eligible for the DSP, but a lot of fellow moderators did, and congrats to them. It's up 30% since their entry. I think this is a great thing for Reddit and for Wall Street Bets. I think the platform is going to become a lot more vibrant, and really looking forward to seeing where this goes.
Well, why do you say that, Noor? Why are you confident that it's going to become even more vibrant, as you put it?
Because, I mean, this is a company that's been hamstrung by having to operate on a shoestring budget for basically its entire life. With $750 million more in the bank, who knows how many more staff they're going to add, what kind of new features they're going to build out. I think the sky's the limit.
Noor, so what's on your wish list, right? As a moderator, as a user, what are some of the changes? Just purely, again, to your point, kind of if money's no object, how would you make Reddit a better place?
I think actually Reddit has empowered us to build a lot of the stuff that we want to see. And so we've built within Wall Street Bets a whole lot of games and interactions for our community, such as ban bets or having sticky posts by users. These are all things that Reddit has given us the ability to run off and go do. And now Reddit's come out with something really cool that no one's really been talking about, which is the developer platform, which allows users to actually build apps within Reddit. I think this is going to be the next big evolution in Reddit. And again, no one's really been talking about it. It's in private beta, and it's going to completely change how Reddit operates, I think.
And Noor, part of the excitement, I think, for Reddit was, the way it's kind of pitching itself as an AI play, Noor, this idea that it'll allow third parties to license access to data on the platform. As a moderator, Noor, what do you make of that strategy? You a fan of it?
I think it's great because it incentivizes Reddit to ensure that the content on its platform is actually human. It's actually authentic, because as soon as that data becomes poisoned with other auto-generated content, the value of the whole data set goes down. So this is aligning Reddit's incentives with the incentives of the user and keeping Reddit authentic.
Do you think, though, that it sort of is teaching Gen AI how to replace it in the longer term?
And sure, yeah, there's no problem with that. I think the ultimate goal of Reddit or Google or any of these information categorization systems is to present the most pertinent information to the user. And I think there's definitely a place where you want to talk to a human and get their perspective. And then there's times where you want to summarize the perspective of all humans. And so I think it's actually the perfect balance.
Were you surprised, Noor, when I'm just curious, you've been a moderator there for a while, were you surprised when you saw the company's financials in any way? The company's been around so long, but still was posting a net loss around $90 million in 2023. Did that surprise you, Noor, when you saw that?
No, not at all. I think we all knew that Reddit had been losing money year after year for so long. And I think it's actually been reflected in the fact that ads on the platform really haven't been that invasive and weren't that invasive for a very long time. They only recently, within 2-3 years, shifted from programmatic ads to direct deals, which is a huge jump in revenue per user. So they're definitely all the way shifting in the right way. The one thing that did surprise me was, or two things actually. One was how little revenue they made from Reddit Premium. Only 2% of their revenue came from Reddit Premium. And two, how they were actually profitable for the first time in Q4 of last year. So for the first time in their 20-year lifespan, they've had a profitable quarter.
Noor, I also want to ask you, you're on Wall Street Bets, which obviously we in the financial media started paying a lot more attention to a couple of years ago with the sort of meme stock boom. Like, what's the vibe there these days? What's the hot trade? Give us some Wall Street Bets insight.
Absolutely. We've all been about AI and AI and NVIDIA lately. We got on the bandwagon quite early, and so we've had a lot of people within our community realize tremendous gains on NVIDIA. Right now, because of Reddit blowing up, and this being the IPO week, we're seeing a lot of traction around that. But at any given point, we're always highlighting the top tickers in our community that are being discussed. And so today, we were looking at DWAC, NVIDIA, and Reddit. These were the top three. And I think that represents the average Redditor on Wall Street Bets quite accurately.
It represents us pretty well too, Noor, because that's what we've been talking about today also. Thank you so much. Really appreciate it. Have a great weekend.
Thanks. You as well.
Thanks.
Cheers.
Take care.
Time now for what to watch next week, which will be a holiday-shortened week with markets closed on Friday for Good Friday. Starting out with the Fed, we're going to be getting new Fed commentary throughout the week from Fed Governors Lisa Cook and Christopher Waller. Fed Chair Jerome Powell will cap off the week on Friday after the latest PCE numbers come in. Plus, Chicago Fed President Austin Goolsbee is speaking with Yahoo Finance's very own Jennifer Schonberger. That is live this Monday at 9 a.m. Eastern on the Morning Brief. You won't want to miss it.
Taking a look at economic data, the latest PCE reading coming out on Friday, the Fed's preferred inflation gauge, giving us more insight on the health of the economy. An economist forecast PCE will tick up slightly month over month, but core PCE should go down.
And moving over to the earnings front, McCormick and Company, GameStop, Carnival, Rumble, Land's End, and Walgreens all reporting next week. Carnival will share its first quarterly results on Wednesday. The American Cruise Line having a slow start to the year, down about 8%, but closing higher today.
And that does it for today's Market Domination Overtime. Make sure to stream Yahoo Finance this weekend. On Sunday, we're going to be airing highlights from the Makers Conference, which brought together women and allies for an unforgettable 3-day leadership summit. You don't want to miss that. We've got more Yahoo Finance on the other side. Keep it right here.
Consumers may feel a pinch in their wallet as gas prices rise. Here with what's driving the move higher is Yahoo Finance's Inez Ferre here with the details. Inez.
Yeah, Josh, and usually at this time of year, as we're approaching the spring or in the spring, you will see oil or gasoline prices, I should say, rather, go higher. And part of that has to do with that summer blend that is more expensive. Part of that is demand driven as you have more drivers that are hitting the road. But what we're seeing right now is that gasoline prices are higher than they were at the same time last year. So there's been a bit of an acceleration when it comes to gas prices. You're looking at the national average that's at $3.53. That's almost 10 cents higher than what this was a year ago. And this is despite the EIA just came out with data this week showing that last week you saw gasoline demand falling. So what gives? Well, higher oil prices. That is what has been driving this accelerated pace, if you will, of gasoline prices going higher. And of course, the higher oil prices is because of everything that has to do with the OPEC cuts, with the Russian refineries that have been interrupted because of the Ukrainian drone attacks. You also have falling inventory that has increased prices. Look there, you're looking at West Texas Intermediate above $80 a barrel. And you're also watching Brent crude that's been trading above $85 a barrel. So this has driven these prices higher. There is some good news, and that is that BP refinery, the largest in the Midwest in Indiana, that has been restored fully. I mean, you were looking at Illinois prices that in 1 week went up by 20 cents. So you may see a sort of deceleration a little bit in those price hikes at the pump. And and these prices have gone higher rather quickly. So there's some analysts that are also saying, look, oil is supposed to pull back a little bit from these elevated prices that we've seen them at, guys.
Ines, thanks a lot.
A changing of leadership at Keurig Dr. Pepper, company's current CEO planning to step down in the second quarter. We hear from the outgoing and incoming executives. It's on the other side of the break.
It is the end of an era. Keurig Dr. Pepper CEO Robert Gamgort will be stepping aside in the second quarter and ushering in a new era with current COO Tim Cofer. I have them both with me right now in the Yahoo Finance New York City studio. Good to see you both of you guys. I appreciate you making the time. I know it's busy days for you both.
Good to be here.
Bob, let me start with you. I'm generally fascinated by corporate just handovers, the passing of the baton.
Yeah.
How did you select Tim?
Well, we founded the company about 5 years ago around the insight of a pure play beverage company that could deliver a beverage anytime, any place. And the success has been tremendous. Our track record has been one where we've outperformed our peers and we've delivered shareholder performance that's way above what our peer set was. But that's about the past. The future is really bright, and at some point you need to have a transition. So it's a nice foundation, but that foundation needs to be built upon and activated. And so we needed to find somebody who understood consumers, who had run companies at scale, who had experience across dozens of categories, and had the right cultural fit. And we couldn't be happier than to have Tim taken over as CEO.
For the past few months, how does this work? I mean, do you pick his brain? Give me all the secrets to this company so I can execute out of the block. I mean, you're an experienced executive. This isn't your first rodeo.
Yeah, I mean, no doubt. I mean, first of all, it's obviously a privilege to join this great company. It's young, it's dynamic, best days still ahead. So I'm looking forward to partnering with Bob and learning from Bob and our board and all of our colleagues. But, for me, as you said, it's only been a couple of quarters that I've been at KDP, but I do bring, over 3 decades of experience in broader CPG, mostly in food and beverage. And I can tell you 2 things. One is, I think beverage is a great space, as we were talking about earlier. I mean, this is a huge market, $300 billion. High growth and really dynamic, right? It's always changing consumer preferences, so there's always opportunities for growth and disruption. And the other is, Bob and the team have done a great job. We have built an advantage platform here at KDP. The capabilities, the route to market, the brand portfolio, got a lot going for us, and I'm excited about leading the next chapter of growth.
What's the biggest opportunity that you want to unlock in the second half of the year? You take over in the second quarter.
Yep.
Second half of this year and early 2025, what are your biggest initiatives?
Yeah, well, first of all, we've got both a leading refreshment beverage business as well as on coffee business. And we've got a great innovation slate on both sides. On coffee, we've actually recently announced some pretty exciting news, and I'm pumped about that. You think about Keurig. Keurig was really the innovator, the pioneer of single-serve coffee 30 years ago. And since then, Bob and our Keurig team has really listened to consumers to understand how do we continue to innovate and disrupt. That leads us to some exciting innovation that we just released last week in terms of news. One of them is an all-new system that allows a consumer to make a great cup of coffee shop experience, whether they want an espresso, cappuccino, or a cold coffee.
I want all of them, Tim.
Yeah, that's what I've heard.
Okay.
You're a big coffee drinker.
Very true.
And that system's going to do it. And what's really cool about it, it also delivers on a sustainability benefit that's really important. So this new system will do it plastic-free and aluminum-free. Our new Keurig Alta and K rounds. The other big news, real quickly, on the coffee side, is we're launching a K Brew and Chill. That's going to allow a consumer to satisfy that cold brew experience that I know is big for you in iced coffee.
Is that one of the things, Bob, holding back this coffee business? It's been under pressure the past year and a half. Millennial people drinking coffee, iced coffee out of a straw. They don't want to stain their teeth. Drip coffee's dead. What's the issue here?
Well, coffee is still very vibrant. If you look at the recent consumption of coffee, it's hit a 50-year high in terms of the number of people who drink coffee. But like many categories, it soared during the pandemic, and then we've had a bit of a recovery issue since then. And it's interesting because it's a global coffee category issue in pretty much every developed markets. But we don't sit still. We still deliver all of our financial performance and commitments despite those challenges. And as you're hearing from Tim on the innovation side, we will continue to make coffee interesting and make those coffee shop experiences like cold or specialty available to everyone in their home.
Is the coffee business back to growth this year?
The coffee business in total on an occasions basis and aggregate is starting to recover post-pandemic. And we continue to see sequential improvement every single period, and it can only help when we put innovation like the ones that we're talking about there in the marketplace to continue to get people excited about coffee at home.
Tim, when did these new brewers start hitting, and how many do you expect to ship this year?
Yeah, so that K Brew and Chill, that's going to give that chilled experience at home, those launch this fall. And then we have a number of other ideas coming out early next year, like the smallest ever footprint brewer, that's going to fit in any space and any budget. That comes out early next year. And then that new Alta system and that plastic-free and aluminum-free, we're going to start beta testing that with consumers later this year to really perfect it, get the continued consumer feedback, and then launch it as soon as we're ready and ensure we can do it with excellence.
Yeah, I was going to add one thing to Brian, which is also, when you talk about cold coffee, we've expanded our position in ready-to-drink coffee, which is a growing segment. So we've had the partnership that we announced with an investment in La Colombe, which has now turned into an investment in Chobani. And bringing that to market, that draft latte they produce, is another way to attract younger consumers.
Bob, maybe this one's for you. Why does your stock trade at a discount to some of your other beverage peers? I hear what you're doing. You have a giant position in coffee. You have the energy drink opportunity. You're growing internationally. What ultimately unlocks the valuation on your company?
Yeah, a couple things. So one is, right now, if you look at coffee around the globe, people are a bit concerned because of the post-consumer, the post-COVID rebound with consumers. I'm not the least bit worried about that, given all of the bullish metrics on coffee. Interestingly, we've had a journey from being a private company to a closely held company to a widely held company. We talked about this in our investor day. 900 million shares over the past 5 years have been put in the market. In terms of monetization of a company in public markets, that's second only in history to the U.S. government's monetization of AIG.
That's a big number.
That's a big number. And we did, one of our investors had to do a block trade recently that was the largest block trade ever done. So there's no question on supply and demand. There's been a lot of supply in stock. The good news is that investor, the company who took Keurig private, said, we're holding on our current position, which is about a 20% ownership position. And to tell you how attractive we think the current valuation is, the company has purchased over $1 billion worth of shares.
So you'll stay aggressive buying back.
Absolutely. When we see this kind of value, we're opportunistic, not formulaic. And also, more importantly, I think for most people, is the two of us plus our CFO have bought a substantial number of shares just recently because we just see it as an attractive entry price. And it's not because of the fundamentals of the company that we've outperformed our peers. There's just been a lot of supply of stock into the market because we've gone from private to public.
Tim, the last one to you. There's been so much consolidation in this space over the past 5 years. During partnerships, entire companies covered. We were talking off camera about Campbell Soup buying Sovos Brands. I know you know CEO Mark Klaus well. Part of your job, do you think it will be to make that next key acquisition for the company, and what sectors interest you?
Yeah, I mean, the last few years, again, Bob and the team have done a great job as you think about a buy, build, and partner strategy. What's so cool about beverages is, again, it's a very dynamic space. There'll always be new opportunities. It might be in energy, it might be in sports hydration, ready-to-drink coffee. I think we've got a really good track record and really positioned ourselves to be a preferred partner in the industry. Sometimes it makes sense for us to do a straight-up acquisition. We've done that in the past. We can do it again. Other times it makes better sense to partner, get that exposure, but keep that entrepreneur with the skin in the game, real alignment to drive the business, and then that still allows us to do it in a more, let's say, capital responsible way, still give us optionality down the road. Examples of that would be C4 Energy. We've recently done that. We've got a 34% stake in that high growth business. We've got a great partnership with Electrolit, sports hydration, #1 in Mexico. We'll be the ones to bring the distribution here to the U.S. So those are great examples, I think, of a partnership strategy that can continue to round out a high growth portfolio.
Bob, how are you going to handle this retirement stuff?
No, I'm not worried about that.
You're going to strike me as a retirement type of guy.
So I think, first of all, I'm going to remain as chair of KDP, so we get to partner together for the long haul, and there's a lot of interesting stuff out there.
All right, well, thank you for giving always a lot of time to Yahoo Finance. We appreciate Bob Gamgort, Tim Cofer, good to see you, and good luck in the new position. Appreciate it.
Thanks, Brian.
All right, much more ahead on Yahoo Finance.
sister-run noodle company hits grocery shelves nationwide.
When I was a kid and I was like always trying to like hide my lunch, or I just didn't want people to come over when my mom was making something particularly aromatic. Fast forward to today where I get a chance to proudly put this in front of the country.
The types of aromatic dishes Vanessa Pham once tried to hide from the world are now on full display in vibrant packaging on the shelves of major retailers. The brand's colorful journey is also on full display across the internet, thanks to Pham's Now Tell the World attitude.
Every time I go into the grocery store, I always got to take the phone out and do like the selfie video. It always feels surreal.
Omsom is a sauce and noodle startup partnering with prominent Asian chefs to offer premium, authentic flavors. This isn't your usual microwavable instant noodles you might think of. A huge step Vanessa and her sister Kim say is part of their personal mission to shake up ethnic aisles at grocery stores and bring these dishes to the mainstream. But the recipe to get here, well, it wasn't a simple one. A global pandemic, Silicon Valley Bank's collapse, and the challenges any 24-year-old would face leading a brand new startup all stood in the way of her vision and mission of spreading her values and culture through the love of food.
Tell us what Omsom means.
Yes.
I mean, that in itself just symbolizes so much of the mission.
Omsom is actually based on a Vietnamese word, som. And in Vietnamese, it means rowdy, rambunctious, riotous. It's actually a negative term. It's what our parents would use when they were trying to scold us. And Kim and I were really inspired by that energy. What if we kind of turn that on its head and celebrate that aspect of who we are? And Omsom is all about being proud and loud, especially when the stereotype of Asian Americans in America is kind of like submissive or docile. Omsom is our true kind of energy and ethos and spirit.
While hiking in Bolivia in 2018 with her more free-spirited sister, the once risk-averse Pham decided to lean into what she felt was her true ethos and leave her steady consulting career behind.
We instantly circled around the mission and the industry. And the mission is to educate on multitudes within Asian America, honor and celebrate Asian cuisines and flavors. And the industry just had to be food, because for us, it was a love language. It was how we first really learned to engage with our culture as Vietnamese Americans and daughters of refugees.
With nothing more than what the two sisters had in the bank, they set out on their mission to create something unique. Embracing their roots was a catalyst to create Omsom, as they saw an opportunity to tap into the ethnic food market, which is set to reach $84.7 billion by 2034. And investors saw the opportunity too, as a number of them, including the co-founder of the luggage company Away, Jen Rubio, founder of the online wedding platform Zola, Shanlin Ma, and former Whole Foods executive turned VC founder Ellie Truesdell of New Fair Partners, helped fund the Pham sisters' vision. For Pham, embracing her personality, well, that was how she learned to lead the brand.
Do you see yourself as more of a risk-forward leader now? Do you feel like you're tapping in to that mission?
I would say that the person who I was when we were first building Omsom is very different than the person I am today. I think my Proud and Loud has actually been embracing who I am, which is very sensitive, very empathetic, lots of feelings, and learning to see that that's a huge strength as a leader if I don't make myself wrong for that or suppress that.
You also founded the company at such a young age. I think you were, what, 24?
I was 24,
24,
a baby, yeah.
How did you push through that noise and say, I may be young, but I'm making a difference?
Yeah. I would say the loudest noise was actually my own self-doubt at the time. And so much of this journey has been actually working with my kind of inner narratives and dialogue. And now I think I'm kind of my own hype woman. So
A hype woman with a core team who have helped her create not just food products, but an environment fueled by the brand's identity and Pham's own energetic outlook, something she has embedded in the culture.
Everybody here is incredibly talented, incredibly driven, and I think enlivened by the mission of OMSOM. And I absolutely lean on the team. I think, a strong leader must and should trust and empower those that work with them. I learn from the team every single day.
FAM's journey in starting OMSOM has definitely been a learning experience. As they sought out the right manufacturing partner, which they found in Chicago, back in Brooklyn, another huge lesson came their way: how to launch a specialty food business in the middle of a global pandemic.
When we started out building OMSOM, we were just wide-eyed. We didn't know what could come. And before we even launched, the first big challenge came. Do we launch in the midst of this pandemic at the start of it, or do we pause and wait it out? And what we realized is that folks during this time are going to be at home. They're going to be wanting to feel a sense of connection and home. And we felt like that's what OMSOM's all about. And I think we did make the right decision, despite some folks warning us that it could be a difficult time.
Who were those folks? Those investors, those people who backed you? How did you push over that?
One of my philosophies as a leader is, you've got this whole kind of network of folks, whether they're investors or, other folks. And I believe it's so important to, take in their input, their advice, and their experience like a sponge. But at the end of the day, coming together with, your team, centering your values and finding the best path forward for the company is really, that power is yours. We decided this was the time that we wanted to bring this company to the world.
Just 3 years after launching during COVID, FAM faced another major obstacle.
Regulators shut down Silicon Valley Bank. The FDIC has taken control of the bank deposits. So what's the fallout, the ripple effects?
Leaving the startup without access to their capital right before the brand was scheduled to launch their second product line, saucy noodles.
Nothing can really prepare you for that type of, uncertainty. I immediately had to figure out what our options were. And at the same time, Kim and I started working together on how we wanted to communicate what was going on to our community. So we wanted to center our values around transparency and around bringing them in.
FAM and her sister were transparent with their community in a way that you might expect from the young founders on social media.
We did not know what would happen in the coming days. And so we put our heads together that Saturday morning and wrote something from the heart. Running a proud and loud business doesn't always mean being celebratory. So let's talk about how SVB's collapse poses a major existential threat to many small businesses, including OMSOM. I think while we were still very scared and nervous, we felt deeply heartened by the people that showed up for us.
Talk about what values you hold closest to you as a leader.
One of the values that I've really centered in my journey as a leader is being heart forward, which is something that I don't think was necessarily historically celebrated in leadership. It was about being, decisive, being kind of just like leading with certainty and confidence, sometimes at the expense of your humanity. And I feel like at the early stages of my journey, I tried that on, and I was always making mistakes when I was in that, headspace of being something that I wasn't. And so the last couple of years, I've started to accept more of who I am in my leadership. If I'm, working on something in my own journey, I'm open to sharing that. And I hope that that kind of invites people to feel confident and accepted in who they are at OMSOM too.
When your team thinks of you as a leader, what do you hope is the message that you're getting across?
I really hope that everybody at OMSOM feels valued for who they are and what they bring to the table, and that they feel they have room to learn, to sometimes make mistakes. It's about celebrating your truth and exactly what makes you you. I want OMSOM to be the type of place where people are learning and expanding, but also feeling great pride in their kind of natural strengths.
FAM and her team are determined to fill a white space. Think Kava and how it's setting out to fill the white space for fast casual Mediterranean food, or what Chipotle has done for fast casual Mexican cuisine. And now OMSOM aims to fill the void for premium, authentic Asian flavors in the packaged food market. That market is expected to grow around 50% globally by 2030. And while Omsom doesn't disclose its finances publicly, the suggested retail price for its saucy noodles and its cooking sauces range from nearly $4 to $5. Since launch, the brand has sold 4 million products and expanded its presence to over 2,000 stores without losing sight of its roots. Pham isn't satisfied yet, though. Far from it. She wants, in her own words, proud and loud Asian flavors to be mainstream.
I want to see Omsom become a cultural force, a household name that continues to honor Asian American communities and flavors and culture every single day. I want us to be in homes across the country, but still hold that ethos and that heart that we do today.
An ethos and heart that Pham and her sister inherited from their parents, who, as refugees, weren't able to take the same kinds of risks.
Your parents must be so proud of you. What do you think they think about all that you have done?
They tell us all the time, which I really appreciate. They tell us that we are honoring our family history by the work that we do, and because they're refugees and they've, built the life we have today, it is my, biggest life stream to honor them and do right by them.
If there's one moment that really felt like, wow, I made it, we did it, what would that moment be?
It's when we've shown the people who helped to get us here what we've done. And so it's really my grandparents. We were featured in a spread in El Vietnam, and it's written in Vietnamese. So I cannot wait to bring it to them because they can read it and really understand that. And that'll be the moment, I think, when it really hits me, what we've accomplished.